IRS audits often stir up anxiety and confusion among taxpayers, with many believing that an audit is a precursor to severe penalties or criminal charges. However, a significant amount of the fear surrounding audits is based on myths rather than facts. Understanding the reality behind these common misconceptions can help you approach your taxes with more confidence and clarity. Here are the top 10 myths about IRS audits that aren't true. 1. Audits are a sign of criminal activity. Many people believe that being audited means the IRS suspects fraud or criminal behavior. In reality, audits are typically routine checks to ensure that tax returns are accurate. The vast majority of audits are triggered by random selection or minor discrepancies, not because of criminal intent. 2. Everyone gets audited. It's a common myth that most taxpayers will face an audit at some point. In fact, only a small percentage of tax returns are audited each year. The IRS typically audits around 1% of individual returns, focusing on those with unusual or high-risk items. 3. You should panic if audited. An IRS audit is not a death sentence. While it may be stressful, audits are usually administrative procedures that simply require you to provide additional documentation or clarifications. Maintaining organized records and cooperating with the auditor can help the process go smoothly without severe repercussions. 4. Only high-income earners are audited. There is a misconception that the IRS only audits the wealthy. Although higher-income individuals do face a slightly higher audit rate, low and middle-income taxpayers are also subject to audits, especially if there are inconsistencies or errors on their returns. Accuracy is key for everyone, regardless of income. 5. Filing an extension means you're more likely to be audited. Some taxpayers believe that filing for a tax extension increases the likelihood of an audit. However, an extension simply gives you more time to file your return. It does not affect the IRS's selection process for audits. The focus remains on the accuracy of the information provided, not on the filing date. 6. An audit will automatically result in a tax bill. Not every audit results in additional taxes owed. Many audits conclude with no changes to the return, especially if you've maintained accurate records. Even if discrepancies are found, you may be eligible for penalty abatement or payment plans, depending on the situation. 7. You must hire a lawyer immediately if audited. While hiring a tax professional or an attorney can be helpful in complex cases, it's not a requirement for every audit. Many audits are resolved efficiently with the help of a competent accountant. Evaluate the complexity of your audit before deciding if legal representation is necessary. 8. IRS audits are only based on random selection. Audits are not solely random. They are often triggered by specific red flags such as inconsistencies, large deductions, or significant income discrepancies. However, this does not mean that all flagged returns are fraudulent. Often, these issues are simply due to errors or misunderstandings in the tax code. 9. You can't appeal an audit decision. If you disagree with the findings of an IRS audit, you do have the right to appeal the decision. The IRS offers a formal appeals process where you can present your case and additional evidence. This process is designed to ensure fairness and transparency in the audit process. 10. Audits are designed to catch everyone making mistakes. The primary goal of an IRS audit is to verify the accuracy of tax returns, not to catch every minor mistake. The IRS understands that taxpayers sometimes make honest errors, and many audits focus on correcting these discrepancies rather than penalizing the taxpayer harshly. In most cases, audits are educational opportunities to improve future tax filings. Understanding these myths and the reality behind IRS audits can help reduce the stress and uncertainty associated with tax filing. By maintaining accurate records, staying informed, and seeking professional advice when necessary, you can navigate the audit process with confidence.